A week ago, markets thought there was very little chance of a rate hike next week. Tonight, after today's minimum wage decision, it's a 40% chance. And another rate hike by August is now seen as a certainty. And that sent the Aussie dollar back above 66 US cents today after falling below 65 yesterday. Today's decision puts the minimum wage at just under 49% of the average wage, up from 43.7% a decade ago. This chart compares the minimum wage increase with the wage price index, which is the main indicator of wage growth. The difference we're seeing at the moment between them is not totally unheard of, but it's very unusual. Now, although wages are increasing at less than 4% a year, total compensation is growing at 10% because of the extra hours that people are working. But subtract interest, tax and rising prices, and that's when you get a cost of living crisis. But what the Reserve Bank is focused on is unit labour costs, that is wages per unit of production, because that's what drives business costs and prices. Unit labour costs are growing at 7% a year, which is why the Reserve Bank will probably increase rates again. And the reason for that is that productivity, or output per hour worked, is falling. So if wages accelerate after today's decision and productivity does not turn around, the RBA will keep increasing interest rates until there's a recession. Adairs has become the latest retailer to admit that sales are being smashed by the cost of living crisis, so its share price was smashed as well. The overall market went up after strong gains in New York and Asia today, and on commodity markets, oil and iron ore both rose pretty strongly. And that's finance.